Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we focus on the activity in the markets using the power of stock charts, using data visualization techniques, technical analysis, behavioral finance to try to make sense of these markets in uncertain times. As we've talked about many times, I think the goal of the trend follower, the goal of a momentum investor is threefold. Number one, identify trends. Number two, follow those trends. Number three, anticipate when those trends are exhausted. It's interesting as we get through the course of the show, you'll find some of the stocks like in the energy sector, airlines, I would throw in there. You're getting what are called bullish momentum divergences. The price going lower over the last couple weeks. The momentum actually starting to slope higher a little bit, which shows you a little bit of a buying interest, a little bit of increase in demand. And the question, as always, is: do you get a follow through? Do you get a reversal in some of those stocks that have come off a little bit recently? There's no denying the strength they're seeing in some of the particular sectors like healthcare, but especially things like technology. Those are the ones that are sort of middle of the road today. They're sort of middle of the pack as the cyclical things, energy, materials, financials at the top of the list. We'll look at all of that and more as we go through the course of the show. But I did want to remind you some of the great guests we have coming on the Final Bar. I'm excited to talk to Kathy Donnelly, joining us for the first time today. Tomorrow on the 26th, we have John Kosar. Sorry, that's Thursday the 26th. We have John Kosar, founder of Asbury Research in Chicago. Coming up on Friday, we have our latest episode of The Pitch. This is our monthly effort to bring three expert commentators in front of you, each pitching five ideas, five technically oriented investment ideas. They will each have a chance to pitch you their ideas. Then we'll discuss them as a group. You will leave that special with a paper filled with tickers to pay attention to and dig into a little deeper after the show. Go to stockcharts.com/thepitch for more information on that particular event. Let's continue on today's show with our market recap. So as we're looking at the markets today, the S&P really pushing higher through the course of the day, gave back some of the gains, about half of the gains, we'll call it, during the last 30 minutes or so. But overall, approaching that 4,500 level, the S&P and the NASDAQ both making new all-time highs today. And I know I probably haven't pointed it out in a while, but on your stock charts dashboard, we have a section, a widget you can add called predefined alerts. And I just added this recently in the last couple of weeks. You might have noticed it pop up here. And I found it to be a really great, quick visual as to what's happening. These are all preset alerts looking at major indexes and ETFs crossing key levels, sector breadth indications, broad market breadth indications. So when I'm seeing a lot of green and only one red indicator, which is the summation index, which is one of the breadth indicators based on the New York Stock Exchange, everything else is pretty much things breaking above key levels or breaking new all-time highs. Certainly shows you the broad advance that we've had yesterday, really spilling over into today's trading. Let's look a little elsewhere in the equity space. So the NASDAQ outperforming the S&P today with the NASDAQ composite up 0.5%. Now that's with technology actually down a little bit using the XLK today. Mid caps and small caps both up and both outperforming the S&P, pushing to the upside. And again, those indexes have a little more weight in some of the cyclical sectors that are leading today. So it makes sense that they'd be pushing onto the upside. And the VIX is still just above 17 today. Looking at other asset classes, you have interest rates steadily increasing. Looking at the 10-year yield, which is actually approaching 1.3%. It's just below there, around 129 as we're recording this one. The TLT, proxy for bond prices that we tend to use, is down about 0.8%. The dollar index essentially flat. The dollar overall has seen that rotation from distribution to accumulation, I would argue, in the course of the year 2021, but not really following through to the upside. It's sort of showing all the signs of acceleration, but not quite doing it, not quite pushing to new all-time highs or new swing highs just yet. Commodities overall mixed with the commodity index, with crude oil doing just fine. The energy sector was number one, up 1.7% today. Gold, precious metals actually rolling over, particularly gold, which finished just below the zero line today. Silver actually held in there much better and had a much bigger gain. So overall commodities stronger, and energy, as I mentioned, the number one sector. Materials not far behind that. Cryptocurrencies, as always, sort of a choppy experience. In the last 24 hours, Bitcoin has really come off of that 50,000 level. It eclipsed 50,000 yesterday, came back below that, bouncing off of the 48,000 level currently, and about 2 to 3% below where it was yesterday. You see a lot of red on the list of cryptocurrencies just today with what's happening. Let's look at a chart of the S&P 500, sort of pay attention to the long-term trend. And we've talked about this market that is in an unrelenting uptrend, a consistent pattern of higher highs and higher lows. And as I've mentioned many times, I think if you do nothing else, focus on the trends, focus on the highs and the lows. Are the highs getting higher? Are the lows getting higher? If the answers to those questions are yes, the trend is positive. And as much as we might speculate about a reversal in trend, we might talk about, what we've talked about here, weakening breadth conditions, the seasonally weakest part of the year. We're here in August and September, which is supposed to be when a lot of the major pullbacks are most likely to happen, or certainly more likely to happen. The market doesn't really care about those sorts of patterns. It's pushing onward and ever upward. And again, what's happening is the leadership picture is changing, right? You have different stocks that are leading. You have the value trade working in the first 3, 4, 5 months of the year, kind of reverse to some of the growthy sectors like technology. We're back to some of the cyclical sectors reexerting themselves, but that's netted out to the S&P 500 continuing to push higher. And we've seen minimal pullbacks. So last week we had a pullback of a couple percent, but we didn't even touch the 50-day moving average this time. All the pullbacks so far in the year 2021 have met the 50-day moving average and bounced back above there. We've closed below the 50-day, I think, 2 or 3 days in the course of the year. All the rest of the time we've bounced right off of it and pushed higher. So again, I tend to assume as a trend follower that trend is going to continue until proven otherwise. And at this point, the indexes are not saying anything other than continuing to make higher highs and higher lows. So the question is, how does this end? Well, we've talked many times through the course of the year about how the end might look, looking for divergences, looking for breadth conditions to start to deteriorate. Arguably, we've seen both of those things happen recently. The question, though, is when price actually starts to break down. What's interesting on the chart of the S&P now, the 50-day moving average continuing to increase through the course of the year. It's currently around 43.60. The swing lows from last week are almost right at that same exact level, around 43.60, which would mean, for some reason, if we do roll over, I think you have a very clear first line of defense, a first line in the sand that I would be watching. It's currently around 43.60. That's the 50-day. That's the swing low from last time. An uptrend continues until the most recent swing low is broken. I was taught early on, all large losses begin as small losses. So our goal is to identify when the trend begins to turn and make sure we protect ourselves from when the trend really accelerates to the downside. So first thing that would have to happen is we'd have to break that swing low, break the 50-day. Until that happens, I would describe the trend as long and strong. It continues to push onward and ever upward. I'm not struggling to find stocks that continue to show positive trend characteristics. Now, what's interesting about this week in particular is you're getting some bounces off of some fairly low levels. I alluded to things like energy, which we'll look at if we have time here. I do want to hit just very quickly China ETFs. So the FXI and the MCHI are two indexes or two ETFs that we follow fairly regularly, which track the Chinese markets. As you probably know, if you follow the space, a lot of the Chinese names have rolled over fairly aggressively, and there's some regulatory challenges that are coming out. A lot of speculation as to what future regulatory changes may be and what that means for the investability of some of the stocks that have had fairly wide followings and fairly successful long-term trends. And that's how the China ETFs have given back a lot of their gains from the March 2020 market low. What's happening, though, is they're finding some support. And same with energy and airlines and some of these other stocks. They're actually bouncing off of some of these low levels. And they're either making new lows on higher momentum, which is called the bullish momentum divergence. They're actually making higher lows. So if you look at the last month, China's actually making a lower closing low. So if you look at the close there on the gap down in July and you look at the close a couple days ago, we're sort of going downwards in terms of closing values, but we're sloping higher in terms of momentum. So lower lows in price, higher lows in momentum is called the bullish momentum divergence. Indicates that the trend is still down by definition of the lower low, but it's lessening its negativity, if that's a way to describe it, because the momentum is actually coming out of that downward trend. Now, for me as a trend follower, I'm not super thrilled to be jumping into charts like this. I'd much rather see signs of accumulation, which for me would indicate, would suggest higher lows, right? An indication that we're not making lower lows anymore. Last time we went lower, made a new closing low. I would love for us to not do that. Make a new swing high. At this point, the FXI that we're looking at get above 42, which would take us above the swing high from a couple of weeks ago. When you see that rotation from downtrend to uptrend, that's when a chart can become a little more encouraging. And there are a couple charts that come to mind that if you're looking for examples of what that might look like, something like Regeneron is probably a good example to look at right now, where you have this downtrend from last summer of 2020, sort of pushing lower. Made a new low January, another new low in March. We keep making lower lows, but look at how that starts to change, right? We make a higher low at the end of March. We make a series of higher lows into April, into May. We now make higher highs. We're not making new lows. We're avoiding that. And actually, we're pushing above the previous swing high. Getting above 500 here in March, I think, was key. And that's what a rotation can do if you continue to see that upward trend. And now we're in a pattern of higher highs and higher lows. And you want to assume that that's going to continue until proven otherwise. So some interesting stocks that are potentially bouncing out of relatively weak levels. We're going to take a quick break. We'll be back with my guest, Kathy Donnelly. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. Thank you so much for joining us every weekday after the close as we break down the markets using stock charts, using the power of data visualization to understand trends and momentum and breadth and sentiment, all of that good stuff. A couple quick comments before we get to my guest, Kathy Donnelly. First off, we'd love to hear from you, particularly questions that are coming up as you are analyzing your own charts. Questions on technical indicators, particular stocks or ETFs, patterns, signals that you're seeing and try to make sense of. We're here to help point you in the right direction. You can get your questions to us one of three ways: via email, thefinalbar@stockcharts.com, via Twitter @finalbarsctv, on our YouTube channel. Just put a comment below the video that you're watching. We'd love to hear from you. We'll gather all those questions together, try to answer your question in our next Mailbag segment on Friday's show. Also, as a reminder, go to StockChartsTV.com. You can use your email address, set up a free account, start watching all of our fantastic content immediately from our website, also from all your mobile devices. Great guests like Kathy Donnelly, special events like The Pitch and Charting the Second Half, and all of our great shows like The Final Bar. Go to StockChartsTV.com or search on the App Store for StockCharts TV on demand. I want to welcome on today's guest, Kathy Donnelly, joining us on the show for the first time. Kathy's a proprietary equity trader and co-author of The Life Cycle Trade, a really fantastic book which thinks about or describes how to approach IPOs, of which we have no shortage in the last year or two. Kathy, welcome to the show. Thanks for joining us.
Yeah, thank you for having me, David. It's great to be here.
So I know with IPOs that have come out, where I think our cup runneth over with things we could talk about, because there are plenty of names that have come, but you picked a couple to sort of talk through with us. We're starting with ZI, Zoom Info Technologies. What are you seeing here?
Yeah, I wanted to pick ZI because it's an IPO that came out in 2020. And to build on the excitement, David, that you've been building with the S&P and NASDAQ going into new highs, I feel like we're in a great time now where the IPOs from 2020, as well as some of the early IPOs that came out in 2021, have had a lot of time to set up for us. And what I call this setup is the institutional due diligence phase. So when we look at ZI, you'll notice there was initial pop those first 2 weeks there. Yep, we had a prior run up, which is common, and then they go sideways, and they may or may not undercut that first week low. And in this case, it's been out 4 months for ZI. It's gone sideways. So this is the institutional due diligence phase. And what I've noticed is usually about 6 months, 4 to 6 months, and longer. It can be 1 to 2, 3 years. An IPO will have this institutional due diligence phase, and it's range bound in that it won't hit that prior high from that initial IPO run for that period of time. And ZI, just like 3 weeks ago, just barely broke through that prior high. And we call that the turbulence zone. And as you can see, as it tried to approach it even earlier, it ran into some trouble. Yep, got hit back down. And now it's going back up again and getting hit back down. So that's why we call it turbulence, because we just don't know, how long is it going to take to kind of get through that prior high. So, we've got some consolidation happening. I would really like to see a tighter base build, but I think this is one to watch. This is one of the few IPOs that does have earnings, does have sales. So it's in the green versus not having any earnings and only sales, for example. And, it's in that computer enterprise software group, which is always seems to be hot in one time or another because of all the ways that it's making our lives easier in the work that we do. And so I think this is one to watch, and it's ripe. It's in this turbulence zone. So it'd be really nice to see it tighten up, create a nice little base, and this could be one to put on your watch list.
It's very interesting. And I know we have another chart to get to, and I want to make sure we have time for that, Kathy. But when you're looking at a chart like ZI, how do you think of the risk side of it? Because I know a lot of times with IPOs, right, relatively new, less data, less price history than a lot of established names that you might be looking at. How do you think of the reward obviously is astronomical for some of these names, but how do you think about the potential risk? Is there an idea that you can give us quickly how you think about risk with this particular example, ZI?
Well, with this particular example, since it's at that turbulence zone, this is where it can be more volatile. So you can easily get shaken out. But I feel like if it gets past this turbulence zone, makes a nice little base and breaks out, then your risk has been diminished, because now you can say it's in that institutional advance phase. And for the majority of recent IPOs, once they transition from that due diligence phase to the institutional advance phase, that's your prime time, most rewarding part, where you're going to get a really great run at the start. I mean, that's like the best time to get in. So if you can hold on. Now, this has been a little bit more choppier, but there's other ones out there. I mean, Palantir has built a base, Unity has built a base, and they're still a little bit more below their turbulence zone, but they're building that first mature base. So there's a lot of them out there.
Now, we only have a minute left, but I'd love to talk about Coinbase. This is obviously an IPO that many have focused on, Kathy. And how are you looking at this chart? What are you seeing here?
Well, I wanted to bring this one up because this one's only been traded about 2 months. And I know there's a lot of excitement and hype about Coinbase, but it probably has more time. It's only been a couple months. It could do what ZI did and still go sideways for a while and be volatile. So I guess I just want to share with everyone, be patient, give the IPOs time. And then when you see that transition, that's going to be your more reward, less risks time to get in.
It's interesting. These are two great examples to think about, Kathy. I'd love to just ask, with the moment we have left, how do you think about IPOs versus other parts of a portfolio? Is this sort of how do you think about allocating to something like this? Is this a fairly risky part of a portfolio, or do you have a portion that you would allocate just looking at IPOs like this? How do you think about this allocating to an IPO versus other things you could be looking at?
My portfolio is primarily IPOs transitioning from that institutional due diligence phase to institutional advance phase. Where I have a small portion is if I'm trying it early, or I'm trying it in that initial advance where it's very volatile. That I have a small portion. But once I see it transitioning, I know I can put more money into it with less risk.
Kathy, you've introduced me to phrases like the turbulence zone, the institutional advance phase, and I really appreciate it. Those are really good things to keep in mind for some of these recent IPOs. Kathy Donnelly, listen, thank you so much for joining us. Be well, stay safe. We'll talk to you again soon.
Thank you.
That's Kathy Donnelly. Kathy's a proprietary equity trader and co-author of The Life Cycle Trade. And I love the fact that she's talking about it. I know a lot of people are tentative going into an IPO name or recent IPO because it's uncertain, right? There's much more established price history to some of these the FANG names and established stocks you've been following for a while, but the opportunities are there. And we've certainly seen times where stocks are able to make that transition, as she described it, to the institutional advance phase. That's something I'll certainly be looking for on these two names that she highlighted today. It was a great take by Kathy Donnelly. Let's continue on with today's show, and we're going to go to our next segment, which is the Final Bar Mailbag. As I mentioned earlier, we love to hear from you. Feedback on the show, feedback on your host, on our guests. All of that is fair game, but particularly questions that are coming up in your own process as you're analyzing your own charts. You can get to us via email at thefinalbar@stockcharts.com. Let's get to these questions right now. First off, I've been trading for over 20 years and for some reason only recently heard of hidden divergences. Can you explain what it really means and how it is used in trading? That's a really good question. And I should have come up with a really good example beforehand to show you, so I'm going to do my best to describe it. So here in December into January, you have a traditional momentum divergence, which is lower lows in price, higher lows in RSI, or in the momentum indicator. I tend to use RSI, but you could use a lot of different things. So people use MACD and other indicators as well. So lower lows in price, higher lows in RSI is called a bullish divergence or a momentum divergence, what I would call it. I rarely talk about what I've seen called hidden divergences, which is basically the opposite. If you'd actually have higher prices but on weaker momentum, it's actually called a hidden divergence, where it's something that's not quite indicating the same thing. It's there's still a divergence, but it's it's actually a hidden one. The momentum's actually going down on the bottom while the trend in price is going lower. Now, when I was taught technical analysis and I learned about divergences, I really focused on these, and I was taught that the traditional momentum divergences are the most important ones to pay attention to. So I've heard hidden divergences referred to, and I get the logic of them. If I'm analyzing the charts, there's a reason why I don't tend to refer to those. I tend to focus on traditional momentum divergences because that makes sense to me from an anecdotal point of view as well. I like using indicators and patterns where it logically makes sense, right? The price can go lower and the momentum can lessen because there's less selling pressure, and it's just the way that the price dynamics and how they play out. That makes sense to me. The idea that the price should already be rotating higher, I feel like I'm going to pick up on that signal just from the price itself. I don't know if I need what's called a hidden divergence to validate that as a proper signal. I tend to just see that as a higher low, and I kind of move on and go on from there. So it is a similar thing. It's looking at a disagreement between price and momentum. It's just which is actually going up and which is going down when you hit a bottom, and you flip everything I said over, and that's what would happen at a top. That's the answer to your question. Question number 2, how do you compute stocks above their 8 and 21 day moving averages for the S&P 500 and the NASDAQ? That's a really great question. The short answer is we don't have the ability to do that. It's something that's really fascinating, and it's something I'm going to be adding to my wish list of things. We're actually looking at our breadth data right now. We're actually just talking about it. Chip Anderson, our founder, Grayson Rose, who's our VP of operations. We were having a discussion earlier about some of the breadth data that we have and some of the different things we could do to enhance it. And it's something that's going to be on my list for the remainder of this year, and if not further, to think about how to upgrade our breadth data. So there are certain things that you can do, and I'll point you out how to find out what we do have available. So I will tell you 2 things. Number 1, if you just type in something like 50 EMA, you'll find a lot of breadth indexes that track some of those different items. So if I just search in the cursor at the top and type 50 EMA, I'll find a bunch of these indexes. And if you click on more results, there are a bunch of other ones that don't fit on the first page here that are all different indexes and tracking different combinations of moving averages. Those particular ones, the 8 and 21 day, we don't have at this point. I would love for us to add some of those other ones that we could, and I'll take a look at that for sure. But that is how you find existing breadth data. Use the keyword search, find the things that we have available, and if there are any things that you can't find, just hit our support team and let them know, because the more requests we get for some of this breadth data, the easier it's going to be to get for me to get the data and start adding it to our platform. So I'm selfishly answering that question and encouraging all of you, if there are certain things you see or you don't see that you'd like us to add, please let our support desk know. And we capture all of those and aggregate the responses to make sure we give you what people are looking for. Next question, what is your approach for establishing lower support lines, so lower support trend lines or channels for the S&P 500? I've noticed you work off the March low, but when do you start using more recent lows as a basis? It's a really good question. So, you'll notice on my chart of the S&P, this is the daily chart we refer to a lot. You can see some of these dotted lines back here. So this was the first trend line I drew when we came out of that consolidation phase in November of last year. We had this pattern of lower highs and higher lows, a coil pattern. We broke out of that, the resolve to the upside. So I started drawing a trend line once we came back in December. That lined up again in early January, mid-January. We tested it again, and then we broke it. And that was the first indication that that initial trend was changing. Then we established a lower level, and I tracked that one for a little bit. We then broke that trend line, and then we settled into this third trend line, which has been fairly good up until the last couple months when the trend has tapered off a bit. Some people have a whole discipline of analyzing trend lines and counting how many times they're tested. And the basic idea that I was taught, once is chance, twice is coincidence, 3 times is a pattern. And that's to imply that the more you touch a trend line, the more that you keep bouncing off of that level or that trend, the more it validates that as a proper representation of the pace of the trend. And I think that makes sense. But what happens in this sort of environment when the trend has changed? So you could absolutely draw a shallower trend line and take the most recent low and make a shallower trend line using those recent lows. I don't have a huge problem with that. But for me, trend lines are more of a visual tool. It's more of a way to represent visually how the trend is evolving. I have learned that moving averages are a lot more of a dynamic way to follow trends, especially in volatile periods. So for me, the 50-day moving average, simple moving average, is the main way that I would be looking at the S&P right now, as we've talked about. And on things where it's more of a system, I would be using less trend lines, and I use things like exponential moving averages, which are a much better tracker of trends. It's a much way of actually quantifying the pace of a trend, I would argue. Let's see. I love the keyboard shortcut to advanced charts using control and an arrow key. Is there a similar one to allow entering annotation mode without having to scroll down and click annotate? I'm reading that out loud on the air, so my friends Grayson Rose and Chip Anderson on the management team will hear that we have a request for that, because I hear you. Basically, to annotate this chart, you have to click on the spot down here. Now, that's actually by design, because our annotations are all driven by the mouse, right? You're going to have to use your mouse to draw them. So to get into annotation mode, you do have to click there. There are a series of keyboard shortcuts once you get into this place. We don't have time to talk through all of them, but there are some keyboard shortcuts. If you actually search for keyboard shortcut and look for our support articles, you'll find some things that you can actually do. What you're implying, which is actually a really good thing to mention, is if you have a list like the chart of the Dow and you use the chart book feature, you can actually do control and arrow on a Mac or on a PC, and you can quickly advance through each of these charts one by one. It's actually it's command arrow key on the Mac, and you can see I'm just flipping through these charts. It's a great way to dump the S&P 500 and flip through them once at a time. If you want to go through and find particular signals or patterns of breakouts and breakdowns, that's a great way to do it. Thank you guys so much for those questions. As a reminder, we love to hear from you, and some of those things that like breadth data and UI comments, things that we could do better to make stock charts easier to use. Please make sure you send that to our support team, because we track and we quantify how many times we get requests for everything, and we'd love to get you what you're asking for. We need to wrap the show, though, and go to the 3 and 3 charts in 3 minutes. Here we go. I'm highlighting 3 charts that are showing that bullish momentum divergence that we talked about earlier in the show. We were talking about some of these stocks that are seeing lower lows in price, higher lows in RSI, that bullish momentum divergence. We talked about this on the chart of, I think it was the FXI, the China ETF, Pinduoduo PDD is one of the Chinese names, up a good amount today. It's up over 20% today. So really gapping higher and getting above that swing low from earlier in August, which is compelling. But the signals that things were starting to be less bearish actually came out about a week ago, as you had lower lows in price and a bullish momentum divergence, higher lows in RSI. This is now rotated higher. Now, while it's gapped higher today and up a pretty good amount, I'd be monitoring this to see how it does, but you're now nearing the 50-day moving average, also nearing trendline resistance. If you take the February high and the June high, you can see that's all around the same level, sort of 105 to 110. And so I think we're right at that potential resistance level. See if it's able to punch through that. However, the bullish divergence is kind of encouraging for China and some of the Chinese names. Chart 2 showing a bullish divergence, the airline index, $XAL. Is the NYSE ARCA airline index. There are other jets, ETFs, or some of the liquid airlines. You can find a similar pattern if you look. However, the XAL had a really good example, July into August, lower lows, July into August, higher highs in momentum. Now, I think airlines have a lot to prove, and that's why, for me, divergences put them on my radar. What I look for as an indication of wanting to actually get into something like this would be higher lows and higher highs, a rotation like we saw with Regeneron, right? Where you're in a downtrend and you're starting to see that trend turn higher. We're not quite seeing that on airlines yet. Now you're seeing a bounce off of an extreme low level, which is fine. That's how an uptrend could start. I would want validation of a higher low to confirm that, but the bullish divergence is certainly encouraging. Finally, Valero and a lot of the energy names, you're finding that exact same pattern, lower lows in price, higher lows in RSI. This could be the indication of a re-exertion of leadership with the energy sector. We've seen that the last day or two with the XLE and with some of the energy names. Does that continue? I'd look to see if the XLE can regain its previous highs. Folks, that's our show for today. Special thank you to Kathy Donnelly for StockCharts.com in Redmond, Washington. I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.